Welcome to another episode of Real Estate Investing Explained. Here's today's question. I know that not everyone is legally able to invest in real estate syndications according to SEC rules. So what does it take for someone to be able to invest in these types of deals?
What's interesting about the SEC criteria or the thresholds to meet accredited investor status, that is a status that is defined by the SEC on paper pretty clearly, but it still leads to some confusion. And it's because there's two ways to qualify. You either have to make enough money income-wise so you can qualify from your income, or you can qualify based on your assets. If you qualify based on your income, it's $200,000 over the past 2 years, and then you expect to make $200,000 this year as well. That means you can qualify based on your income to be an accredited investor. On the other side, for assets, if you have a net worth of over $1 million, not including your primary residence, then you are able to qualify based on assets. The vast majority of folks, that out there, if they do qualify for accredited investor status, then they will actually meet it based on income. A lot of folks in the coastal markets, particularly here in the Bay Area, they hit it because of the income levels and the higher salaries that come along with the market. So I wanted to bring up that definition of accredited because I would say the vast majority of the syndications that you find in the direct deal space, and by direct what I mean is you go find an operator or a sponsor that those are the folks that are actually putting this together, a deal like this, who are looking for others to invest in them passively. And they will typically expect you to be accredited. Some of them do allow non-accredited investors, though, a limited number of them. And so, but it is, the burden does fall on them to make sure that, if you want to go out and invest in one of those deals, you actually have to study a little bit, right? I mean, you just have to know what you're getting into because, that sponsor is not allowed to take your capital if you are not what's called a sophisticated investor.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.